Good afternoon and welcome to NYFP. Today I'm joined by Alan Valdes of DME Securities. Hi, Alan. Thanks for joining me today.
Thanks for having me.
Well, it looks like it's another risk-on day in today's session. The major averages are higher. Now, we did get good news out from the Eurozone, and sentiment is higher today. But how long do you think that will last?
Maybe to 4 o'clock. No, you're right. This market is so driven by news more than ever before. I mean, we saw yesterday negative news out of Europe. Market collapsed over 300 points at one time, even though we only closed down 100. So these gains, it seems more they sell on rallies than buy on dips now. So, I mean, right now, you're right. We're up 179 points. Good day. I don't think you'll see the market capitulate much today, only because tomorrow we have Bernanke speaking, and we, of course, have the president speaking. So a lot of guys won't be doing much today. Not much volume today, even though we are up, but I think it's going to stay up. But I wouldn't be surprised to see this market come in on any kind of news at any moment.
Alan, since you mentioned Bernanke, I do want to ask you about the Fed's plan going forward. Can you give me your take on Operation Twist and whether or not you think we'll get something similar to that?
Well, Operation Twist is when they take the short-term bond and run the maturity out to be a long-term. The problem with that is it doesn't create jobs. At the end of the day, this is all about jobs. QE3 helped the equity markets, did not create jobs. So that's the whole nutshell. We need to create jobs. Now, the president's supposed to speak. Maybe he has something that he can create jobs, but I don't think there's a silver bullet. So Operation Twist, even though it will help in the short term with the bond maturities, it's not really going to do much structurally. And that's the problem in a nutshell. And traders know that, so they'll trade off it. And for 6 months, if it's $600 billion, they'll trade off it. But again, it's nothing that's going to grow this country, and that's the problem. And it's not going to change, and here's the big problem, it's not going to change the standard of living for the average person. So the average person is going to say, Operation Twist, big deal, what's it done for me? And the answer is nothing. And so I think that's the problem. Just like QE3 for the average guy, nothing. Even for the person working, it's not raising his wages. Wages we saw were down 0.1%. But if you take in inflation, which is up 2.8%, and taxes, I mean, you're losing money. So overall, the standard of living has not moved. That needle has not moved at all with all these QE3s or Operation Twists.
Well, Alan, those are important points that you bring up, but I do want to take a quick look at the financial sector that has been seeing plenty of volatility. We got news of bank stress tests here in the U.S. and also the recent action from the FHFA. Going forward, how are you strategizing, and what is your advice to people out there?
Well, before this, it's almost like a Saturday Night Live comical out there. I mean, Fannie Mae and Freddie Mac suing the banks. I mean, they were the culprit that got the banks into this trouble. But I think long-term, depending on how these lawsuits go, of course, I think long-term the banks are fine. I think what they'll do is they'll stretch out their problems. They'll deleverage, but over a long period of time, which will make the banks okay. And the banks here in America are fine. I mean, they got good balance sheets. They're not lending, we know that, but that'll change eventually also. But, I think these lawsuits are tough right now for these banks. I think it's ridiculous.
Okay, Alan, as always, thank you so much for weighing in on all these topics.
Thanks for having me.